AMC Entertainment shows short-term weakness but bullish long-term trend, according to this analyst. Now, AMC stock is down almost 4% here on the day, and we need to talk about why, as well as give you the latest on what's happening in our markets, as well as the Ortex data with AMC. So let's get into it. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So first things first, let's talk about what's happening in the markets today. As you guys do know, we had the Fed yesterday. Now, the Fed yesterday predicted 2 more rate hikes to get to that terminal rate before they ultimately stop raising rates. Now, the Fed did not raise rates yesterday, and the markets didn't really take that as a positive or a negative. You've seen a initial bearish reaction based off of 2 more rate hikes that are expected. Then the markets bounced back towards the end of the day to actually close positive. So markets didn't really care what the Fed has to say. They're like, hey, 2 more rate hikes, that's nothing, right? So where we're at right now is kind of that rush to safety again. And that rush to safety happens to be in big tech. So everything that is not big tech, a lot of your small and mid cap companies are selling off today because people are trying to rotate into the winning parts of this market, which in 2023 has been big tech. So you're seeing a lot of pressure on a lot of small and mid cap companies. It's not just AMC, and that is a big reason for the day today. Now, we did have a lot of economic data that also came out today. Retail sales month over month for the month of May came in at 0.3%. The consensus was negative 0.1%, so better than expectations. Import prices came in at negative 0.6, expectation negative 0.5. Export prices negative 2%, expectation was negative 0%. New York Empire State Manufacturing Index came in at 6.6%, expected at negative 15.1%, so that's much better than expectations. Initial jobless claims came in at 262,000. Consensus was 249,000, so a little bit more weakness in the labor market. Again, that's kind of a reason why big tech is going higher yet again today. Philly Fed new orders came in at negative 11, expecting negative 15.8, a little bit better than expectations. Philly Fed prices paid came in at 10.5, kind of bad for inflation. Expectation was 9.5. So a little bit worse there. Philly Fed employment at negative 0.4. You were expecting negative 4.4. Philly Fed CapEx came in at 9.9. You were expecting negative 1.4. So all in all, kind of not really great for inflation on the Philly Fed, especially the prices paid and the new orders. Not really a good sign for the economy. So getting more narrowing of this market is kind of the best way to put it, and that's pulling capital out of your small and mid cap stocks. Now, you also did get a couple bond auctions today in which the yields actually did drop, showing that more people went out to actually buy the bonds, and that is driving more money out of this market, guys. So if I wanted to, in a nutshell, explain the data here, decent economic activity, negative for inflation. So the rate hikes, it looks like you're definitely going to be getting those 2 rate hikes that the Fed is forecasting to us. Now, for July, there's a 67% chance of a rate hike. For September, there's a 61% chance of a hold. For November, there's a 60% chance of a hold as well. And for December, there is 45% chance of a hold. January, there's a 41.3% chance of a rate cut. So now you're no longer pricing rate cuts for November or December like you were yesterday, but now you're expecting them for January. Okay, so there is that. Now, let's go ahead and get into this article from Benzinga. Now, Benzinga says AMC Entertainment shows short-term weakness but bullish long-term trend, according to this analyst. It says, the movie theater chain stock lost support at the 8-day exponential moving average, but AMC has been trading in an uptrend since May 31st. An uptrend occurs when a stock consistently makes a series of higher highs and higher lows on the chart. The higher highs indicate the bulls are in control, while the intermediate higher lows indicate consolidation periods. Traders can use moving averages to help identify a trend with rising lower time frame moving averages, such as the 8-day or 20-day exponential moving averages. It says on Tuesday and Wednesday, AMC attempted to regain the 50-day simple moving average SMA as support, but rejected the level both times. AMC may be trading lower on Thursday due to that rejection. It says, if AMC bounces on Friday, Thursday's low of the day will become the next higher low within the pattern. AMC is trading under the 8-day and 21-day EMA, with the 8-day EMA trending under the 21-day, which is bearish. Bullish traders want to see AMC close the trading day above the 8-day EMA, which has been guiding the stock higher since June 7th. If we go ahead and take a look at the 8-day moving average, go ahead and just add this in here, right here. Make sure it comes up in blue. So that's right there. That's been guiding the stock higher, as they say. So you definitely want to see a close above that. If not, a little bit more short-term weakness might be expected. Now, we know the biggest catalyst for AMC is going to be June 29th, the next court date. That's the biggest thing that is really going to affect the stock from here. Although economic data, like we're seeing today, can narrow this market, widen this market, can affect capital moving different places. So when you look at the data coming out tomorrow at 10 o'clock in the morning, you're going to get the Michigan Consumer Sentiment Survey. Now, this survey is expected to come in at 60.8, better than the 59.2% reading that we got last time around. Now, inflation expectations on a one-year basis are expected to come in at 4%. Michigan current conditions expected at 64, and the 5-year inflation expectations expected at 3.1%. If the 5-year inflation expectations do go higher, you're going to start breaking out above levels that you have not been at in a very long time. You are at a 10-year high for the inflation expectations. The only time this really dropped is when, the crash in November actually happened. And it's been up ever since. So this would be a sign that long-term inflation expectations are becoming unanchored, especially if you do, break out to something like 3.4 or 3.3. That would be close to a 25-year high for inflation expectations. So there you have that. I think that could be important to pay attention to coming tomorrow. Now, if we take a look at the Ortex data here for AMC stock on the day, Intera Capital just sold another 1.8 million shares of APE, which is kind of continuing this trend of them just dumping shares of APE. And you can see just literally almost every day, every other day, there's more and more shares that are being sold. So when there's this many shares being sold heading into a major event later in this month, which is the court date, where APE is supposed to fill the gap and rally as AMC Entertainment, the main stock, actually falls. Well, this doesn't show a lot of conviction in that trade, and I think the more they sell heading into it, the more bullish essentially that I would be, okay, heading into the end of the month. Now, if you look at AMC's data here, the short score is at 93. Highest it's been at in a very long time, remaining at very high levels. You got about $600 million worth of short positions currently in AMC stock. Estimated short interest of free float at 23.46. Free float out on loan 37.29. Shares out on loan 192.55 million. Days to cover 8.14. Cost to borrow at about 96% on a trailing 3-month basis, and 100% share utilization. The days to cover continuing to increase, up 50% in the last 3 months, is really driving this short score higher, and that is what is really affecting the stock, or will affect the stock bullishly when more volume does come in. That's basically saying short positions are very high, and there has been very low volume. I've explained that over and over again, but I think it's important to understand, right? Now, the live short interest of free float sitting at 24.49%, 121.27 million shares that are that are currently sold short. Cost bar average 244.5%, cost bar max 270%, cost bar minimum 216.12%. If you look at interactive brokers, you got a cost bar fee of 103% with 150,000 shares that are currently available to be lent out. So that is basically it. Not too much is actually happening. Like I said, the stock is down 3.5%. You're still in an overall uptrend from the lows that we did hit back here on May 31st. I don't really expect a whole lot of downside from here. This is the digestion from the Fed. And after all, we just got a bunch of bullish, indicators as well, as you can see from all of these green lines. So I do expect a bounce. Obviously, there's a lot of option activity expiring this week, so I wouldn't count on it because market makers, they don't want to pay out on some of those options, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.